Today's market call is presented by Robinhood. Take charge of your trades with Robinhood's powerful new free desktop trading platform, Robinhood Legend. While there is no cost to use the Legend platform, there are other fees associated with your brokerage account. See the Robinhood financial fee schedule for more information. August 12th, 11 a.m. on the East Coast. Swizzle, Dan, just the two of us today. By the way, I had a great conversation with Elizabeth Thomas. No longer Elizabeth Young Thomas, as she pointed out, legally changed. I made the comparison of she went from Liz Young, EY from SoFi, to Elizabeth Young Thomas. Now she's just Elizabeth Thomas, not unlike Dan. John Mellencamp going to John Cougar Mellencamp, going to John Cougar, going to John Mellencamp. Back to you.
I think the kids today, John Cougar, his biggest hit came out while he was John Cougar. I want to say in the late 70s. Was it Jack and Diane? That must have easily been. And then he went Mellencamp.
No, that song sucks.
Okay, guy, we get it, bud.
Wow, you bugged me. By the way, and we will get into market.
Oh, by the way, Tim Seymour buddied you last night.
Oh, he palled me. He buddied me.
Palled you, and you did not appreciate it, by the way.
I love it when he
Tim
does
Seymour,
that.
if you guys are fast money fans, I know that Guy is probably your favorite fast money trader, but Tim Seymour is a really funny guy, and he'll do this thing where he buddy chiefs and pals people. And that is something in sport you do not like. You do not like being buddy.
I do not, but when he does it,
it's different. I know,
it's different. It's a little bit
but
different.
He did not do it as a joke yesterday. It literally just rolled off his tongue.
I don't know. Yeah.
And you said, we were just buddy me.
You just buddy me. We were doing, I'm sorry about this, but apparently for some reason, the song Glory Days made it into our group chat.
Yeah.
And everybody said what a great song it is. That is arguably one of the 10 worst songs of all time. And by the way, Dancing in the Dark is right up there.
Those
with
two
shitty
aren't
song.
Born in the USA. I think we talked about this. Are not great songs on what was otherwise a very good album. Born in the USA became an anthem, but you had songs like Working on the Highway, My Hometown, Darlington County, I'm on Fire.
Yeah, Born in the USA is an anthem, but I don't think most people don't really understand what he was trying to say in said song. But again, that's not what we're here to.
Here nor there, Guy. Here nor there. Let's talk about a little inflation. Let's talk about, or maybe lack of new inflation, or super core inflation that maybe was a little hot. Oh, look at that.
Slide it, Earl.
CNBC.
All right, so this was the headline number. So 2.7, less than expected. I think 2.8 was expected-ish. Okay, that's fine. And I think originally the market took its cues from that. Then I think the market looked at the super core, which was hotter. And then I think the market took a leg lower. And then the market said, you know what? Who gives a rat's patootie about super core? And now here we are at 64.20 in the rat's patootie.
That's embarrassing. I mean, honestly.
We're 7 handles away from an all-time high in the S&P, which we'll probably make over the course of this show. Okay, so that's that. And I think what the market is saying today, at least, is puts the Fed in play in a major way. JP Morgan made some comments about the number of rate cuts they see for the remainder of the year. So that's what the market is sort of getting geeked up about. Now, that's fantastic, except that if Stephen can pull up a TLT chart, the TLT didn't get the memo. So if that were in fact the case, one would have thought TLT would be rallying here, rates would be going lower. So that's not happening. Now, look, again, I'm not trying to make a big deal out of this, but the bond market is looking at one thing. I think the equity market is looking at something else entirely.
So one dog looks one way, one goes the other. What do you want from me? Okay, so let's just kind of break down that whole idea. I had a great conversation with David Rosenberg. You just call him
Rosie.
Rosenberg Research. This dropped in the podcast store yesterday, Reversal Podcast, and great combo. And David, by the way, Guy, got a little fired up on a few different things. It was really fun to hear fired up Rosie. But, he used an expression that you use, is like, careful what you wish for here. I mean, listen, when you say the probability, I mean, the CME Fed funds, tracker was already implying a 90% probability of a 25 basis point cut in September. So what does this do? I don't know, man. Like, if inflation was hot, that would have gone down a bit, right? The idea of further rate cuts this year would have gone down a bit. But, if you really look into the number, it's not like it was benign by any means, right? And so let's just pull, October, November up here a little bit. And so now the focus, I was listening to Bloomberg Radio this morning as this was all coming out. That Tom Keene, how sometimes you'll say what do you say? The dulcet tones of
the dulcet tones of whomever.
Yeah, he does not have
isn't exactly dulcet.
He does no, but he's good. He's just old school. Rebecca Patterson was on with him, a couple other people.
Sure.
But they were talking the same way. It's like, okay, so the Fed has been careful, right, not to start cutting because they want to see what the effects of tariffs are on inflation, and it makes sense to kind of hold out a little bit. I mean, that's kind of like consensus thinking. Unless you're in the White House, they want cuts and they want them to come fast and hard, if you think about it. And so, to me, I look at this situation and I just say, where's the fire? You know what I mean? Like, let's wait until we get to Jackson Hole. Let's hear what they have to say there. Not that changes much. The only point is that there's not a Fed meeting, you know what I mean, this month. And so now we're 2.5 weeks away from this sort of thing. And so, like, let's see what happens to September and October probabilities here. September's not going down. They're cutting 25.
I'm glad you said that. There was a scene in Pulp Fiction, which you may or may not remember. It's when Samuel Jackson and John Travolta are in that apartment building and they're interrogating two guys. And then somebody from behind the door comes out blazing, shooting his gun, and all the bullets miss Travolta and Samuel Jackson. Remember that scene? And they viewed it as a bit of a miracle. I mentioned that because
it's a tasty burger.
Right.
Do you know what the name of the burger place was?
No, I forgot. Tell me.
I think it's
I know it.
It's a Hawaiian thing. It's not
Aloha burger.
Not Aloha burger. He goes, that's a tasty burger.
Yeah.
Sorry, go ahead. He goes,
somebody will tell us, and I'm sure somebody in our chat will put it in. Anywhom,
yeah,
all these bullets are flying around them. Their inclination, one would think, to immediately fire their guns, but they look around at each other, and then obviously they put this. They give him his untimely demise, as they say. Now the point is, the bullets are flying all around the Fed right now, but they're not hitting them. So why do anything if people are just going to miss? My point is, and you just said it, there's nothing breaking right now. Like, they are winning at these current levels. There's no reason to do a damn thing. The economy has proven its resilience. Obviously, the stock market doesn't necessarily care. So why fire those bullets when you can save them for something else? See what I did there?
Yeah. Oh, it's like save it for a miracle. The one thing, the Big Kahuna Burger. Thank you, Jacob.
Big Kahuna Burger.
Big Kahuna Burger. That is a terrifying scene, by the way, because I remember seeing that movie in 1994 when it came out. I could have been like one of those dipshit kids, like sitting there on a weekend morning, eating a Big Kahuna Burger, like, kind of working off the night
with
before.
Your mates.
And all of a sudden, these two gangsters come in, and then the way that he just casually shoots the kid on the sofa. I mean, say what again?
That's a great scene.
Say what again? My favorite scene at the end in the diner when Samuel L. Jackson is talking to Tim Roth and he pulls the gun over to him, and he says, I'm trying to be the shepherd here, and he lets him go with his girl.
Yeah.
Sorry about the spoiler here, people.
No, listen,
literally
30 years ago,
and
it's a great movie. That's back, arguably his only great movie. I know you're going to push back on that, but
no, I mean, Reservoir Dogs is amazing. He wrote True Romance, which is one of my top 5. Inglorious Bastards is an absolutely amazing movie. I could care less about the Kill Bill movies. They don't do it for me.
The
Django
Bobby Brown, or what was that one?
Oh, I didn't love that with De Niro. That one, Jackie Brown. That was a little, but great movie maker. I want to see one last thing on the one last thing on the inflation thing, guy. So we just pushed out the big taco trade is back. It's Taco Tuesday. We pushed out the China 90 days as far as those tariffs. They are still 30%. Most other tariffs for everything else coming in around the world are 15%. We still have huge tariffs on Brazil, on India, So there's a lot of stuff that maybe it's not showing yet, but the longer you keep pushing this out and kicking the can down the road, I want to get to now something that Doug Cash just said this today, a blow off top. He sent us an email here. And one of the things I think is really interesting about that concept of a blow off top is like, the markets were obviously on edge about a hot CPI number, confirming all the worst fears of, inflation being induced by tariffs and this and whatever. And the fact that we are rallying on something that just comes in for the most part in line. I wouldn't say it's better, than expected. That you're having this sort of price action. We're going to break down some of the sectors that really stick out to us, but I want to go to a slide that Carter Worth had of Worth Charting in his morning note. And I think this is kind of important here. So let's pull this up. I know that Steven's got it.
The important part, isn't that Elizabeth Thomas's?
Yeah, exactly.
You can find that at SoFi.com/
subscribe. No, but you could also find a guy in your favorite podcast store. So they're relaunching the important part. That's Liz's podcast. But a rocket ship stalls. The shares of retail grocery store chain and online food seller Sprouts the past 2 years has tripled the performance of the Mag 7. Wait, I just totally fucked this.
I don't know what you're trying to
cancel this. Cancel it. Oh my God. I just
cancel
pulled
my subscription to the
This was you from yesterday.
That was me yesterday.
All right. Cancel. I thought he was talking about the S&P.
No, he was talking about Sprout. That's why I saw it. If you remember before the show, I said it earlier.
Okay.
And
all right.
Said,
sorry.
Yeah,
but you know what?
Listen,
we can make mistakes here too. Let me go to the legend for a second here.
Go to the legend because this is important.
I want to show. All right. So here's the VIX, right? And again, we talk about the VIX curve and we know that it's upward sloping. So if you have a VIX right here that's trading under 15, that's the current measure of the volatility of the S&P 500 and the components of it. Okay. So you see that the RSI on the bottom is not exactly oversold, right, at this point. But if you say to yourself, the average of the VIX over the last year or so has been somewhere, not far from where it is right now, it's not telling me a whole heck of a lot. Okay, Let's go to the SPY. I'm just going to go to the SPY, the ETF here, right? And so if you look at this move just of late, and I'm going to just kind of, we're just kind of inching higher. And I just want to show you these little. So look at what's going on here. We had this little spike bottom. You see where my cursor is. So you had this gap lower, and then we basically closed well below the opening. Then we gap higher right near where we opened the prior day, close at the high. We open at the close, and then we close at the low. Look at this pattern, right? And then we open unchanged, and we close near the high. We gap up, and then we close near the prior day close. Okay, you see this? It's just this little tiny stair step, but it's losing gusto. And I think what Doug is looking at under the hood. Okay, so let's go to some of these sectors. Let's look at the bank stocks today. And Stephen put together a little grouping here. Look at the way these stocks are acting. These are some of the better acting stocks over the last few couple months. Like we can agree on that. And why are you laughing? Why are you laughing?
Shot. No, that's okay. Adorable.
Okay, so you see the price action just today. Okay, and then the year to date, we know that the S&P is up on the year 9.25%. Wow, the NASDAQ is up nearly 12%, or is up 12%. Now let's go look at airlines. What the hell is going on in the airlines today, guy?
Got a little bounce. You got some bounce going on in the airlines. For example, look at Southwest Air, and just if you want to.
But wait, hold on. What is airlines? Airlines flying.
Yeah, I think this inflation number. This is just my view. I don't know.
No, you're missing the title of the slide.
Oh,
airlines flying.
Yeah, that's not particularly clever. The airlines taking off.
So we had bank
airlines in a holding pattern.
Flying. No, but they're flying. Okay, so sorry. Go ahead. I'm sorry to interrupt you.
No, it's all good. So Southwest Air, pull that chart up, gentlemen, if you may. And this is one. Yeah, I actually think, as shitty as I am most of the time, and I am pretty shitty. This is one we've done a pretty decent job. If you remember back in April, Southwest Air reported the stock cascaded lower. And what we said at the time is if this stock trades down and is unable to make a new low based on this print, it was on 22.5, 23, and we basically said it was the same low that we saw in the fall of 2023, that the stock was set itself up for a really nice move to the upside. And that's exactly what we saw. Subsequently, we said it should top out somewhere around the high from the summer of 2023, which was about $37.50. And that's exactly what happened. So you go a little bit longer term and you'll see what I'm looking at. Point is, I mean, this has just been, as Tim Seymour says all the time, a great trading stock. You see those lows and you see those highs. Okay, now what? Now we've basically traded down to and held the 200-day moving average. Like, you got to trade these things. And, I think they're not investments. And you can see for the last couple of years, if you try to play it on the investment side, you've got smoke. But in terms of the airlines, if you've taken advantage of some of these ebbs and flows against levels, you may do okay for yourself. And I think we're at one of those levels, one of those inflection points now.
Yeah. Let's go to let me drive in the legend for a second here, Guy. So
I don't have access to the steering wheel.
Yeah.
Opposed to, so I'm sorry to do this.
Yeah.
For everything, what you learn is there's so many scams out there. And just keep the legend up for a second as I opine. One of the largest scams that have taken place over the last 10 to 15 years are these horseshit driver ed classes that seemingly DMV, no, you don't have to wall me, seemingly DMV is in bed with all these companies. I guarantee they're taking some sort of kickback. So kids now are required to take some sort of in-car driver's ed, where some rim bomb bead sits next to your son or daughter in the passenger seat with access to a brake and I think actually a steering wheel. In the case of my 3 kids, it was a gentleman named Bob. To this day, my youngest son, Guy, will bring up the fact that if you had done that, Bob would have failed you, or you went through that stop sign too quickly, you didn't count to 10 or something, or you took that right turn too fast. Bob would have. And you know what I say? Bob can go fuck himself. So why do I bring that up? Because you said, let me drive real quick on the Robinhood app, and I don't have access to it. So I am not Bob right now. Back to you.
I'm speechless.
Did Bill hear any of this? Because it's true.
He thinks
the whole thing is it's a total. If you were to drive like these, I'll save the vernacular. Like these instructors want you to drive, like the 10 and 2 and all those things.
Yeah.
I mean, holy shit.
Yeah.
We have a bad enough situation on the highways and roads of these countries in the first place. As a matter of fact, I would submit, and this is not hyperbole, I would submit that somewhere between 65 and 75% of the people currently on the road have no business being on the road behind the seat of a.
Well, what's wrong then with Bob failing?
No, it's because Bob. No, it's no. Bob is not he should not be the adjudicator. I should be the person taking everybody in the United States.
The guy who's driving, eating a Whopper, and then like texting and driving and everything like that. Like, you should be.
Whopper's a tough sandwich to eat because the amount of ketchup in it, and it has like onions and stuff, and that will inevitably, you'll get some on your shirt, which will piss you off because ketchup doesn't come out on a first swipe.
No. So let's look at just really quickly some of these other airlines, because this United chart, Guy, you see that kind of breakout, that consolidation. That's a good, but these, to your point, let's just go down. Let's look at Delta now for a second. Okay. This is me driving. And you see how it held that 200-day moving average and is breaking out now. Delta looks fairly similar for the most part. And now we're going down the quality curve here. I think if you look at American, it's still below that 200-day moving average. JetBlue is having a big move today. I think there's different sorts of airlines out there right now as far as their performance. I saw a headline today of Spirit Air. What's the ticker of that? Spirit Air. How's that? I believe it's
SAVE, SAVE.
Oh, okay.
They should probably put that into practice, because it's going. It's no longer Spirit. I don't know. It used to be.
So maybe Jacob knows what it comes out. Spirit. But this one, the headline
is it FLYY?
Oh, look at you.
Yeah.
Look at this piece of shit. I don't even know what the hell's going
But I
on
don't
there.
even know. I don't think that's it.
Yeah,
Anyway.
but I guess the point there is that, those stocks having that sort of reaction today is really interesting. It's obviously fairly consumer facing. I know crude oil is down a little bit. And then the other one, and we did a bit on this on Fast Money last night, software stocks. And, the whole notion.
Yes, I'd like to talk about that because that is very interesting, I think.
Yeah. So let's pull up. This is the IGV, but we had a slide of some of the performers of some of these SaaS names, and it'd be interesting to pull it up and get your take really quickly if Steven wants to do that, because this is a group that like these were some of the most I don't know, the big drivers in tech prior to this kind of AI sort of thing, the SaaS names or whatever. And so when you look at the title of this
softwares,
nothing.
that's beautiful. That's
there.
Syracuse education coming
but
back.
by the way, look at the year-to-date performance of these names. I mean, and they're down much more from their 52-week and all-time highs.
They're below the April, like Salesforce, for example, is one of the few stocks that are actually below the April low. So, what we said on Fast Money last night, and I think you would agree with this, they're fighting sort of a two-pronged war that they're losing. The first prong is they're losing on the investment dollars. The second is they're losing on the CapEx dollars. And that's why the stock is at Salesforce specifically has acted like it's acted. I think the stock, made an all-time high in December of last year, somewhere north of, I think, $365. Here we are at 232, again, below the April low. What I will tell you and what I said last night, this is a huge level of support. I mean, this is where we stopped in the summer of last year, June of last year, before it made that move to the upside. Now, people will say it's cheap on valuation. It is historically cheap, probably, but there's a reason why it's cheap. So I actually think, and maybe I'm in the minority here, I think you can take a flyer on Salesforce on the long side.
Yeah, I agree. All right, so let's just, the technicals are the technicals. So you look at this RSI, it's really oversold. You see the stock. It was trading at 275. This is just a few weeks ago. You see where it is right now. It's at 232. I want to just kind of isolate something here really quickly here, guys. So look at the 1 month, okay? Look at how this stock, it opened basically unchanged, traded down to the low of the day was 220, is that 226 and a half or so?
Today, 226.48, I think. Yes.
Okay. So now look at the 1 day chart. Let's look at the 1 week, and you see what's going on here. You see that moving average. So let's go back to this 1 year. Okay. I think you play this thing like you just said. Let's go to the options chain for a second here. Okay. They report on September 3rd. So let's go to
First
September
Friday in September.
Yep. Let's just do regular way, right? So here we see the stock trading at 232. I can use the legend. I go just click on there. That's the at the money. And let's just kind of price some stuff up here. Okay, so 232. The thing that's tough right here, you see there's $10 increments, right? Now, if we were to go to a weekly, which I don't exactly love, the September 5th weekly, you're going to see that there's $5 increments. That's just like some weird sort of thing in high price sort of stocks here. But like the regular way, there's usually a wider. And then as you get closer, they might tighten them up a little bit. But let's go here. Like, so the 235 call is nearly, you probably pay 1075 for that, right? And so if you paid 1075 for the 235, you need the stock to go to 245.75. That's kind of the break even there. If you were to look at a call spread, bringing it back to, let's say you wanted to do the 235, 275, that was that sort of level. I don't love selling the 275. If you look at this, is $1.55 bid. You probably sell that at $1.63 or something like that. That is less than 1% of the stock price generally. And then we can look at from a delta perspective. The delta right here, hold on 1 second. It's going to be a very low delta here, but we can just tell that. You generally don't want to sell low delta options here. The probability of that being in the money is not great. So why bother sell something that's really cheap, I think is the way to kind of think about it. So the delta on the 275 is 11. About 12. So 12% probability of being in the money. So if you were to look at, let's go back to September regular way, that's the September 19th expiration guy. Where do you think you'd want to position yourself to be a break even to kind of catch this move? And you know what, let's go back to the chart for a second, because this is where sometimes the technicals help us out a little bit here. The breakdown level guy, you see where my cursor is?
Yeah.
It's 254. Okay. So that should be a little bit of overhead resistance. So here we are at 232. You basically have, let's call it $22. You know what I mean? As far as resistance, where do you think it? Where would you play this with options?
Yeah. So the options is, look, you obviously spending some money if you want to buy some upside calls, and you're going to give yourself some leverage in terms of the options as well. I mean, that's one way to do it. The other way, you say, you know what? I just play this straight stock here, and I'll stop out below 225. If I'm wrong on the upside, I'm going to look for that move back to 250 something. I can't do it in my head. If you do catch this thing cold post earnings, and we've seen stupid moves in this name before, both to the upside and the downside, you know, you're going to, those options will, you know, theoretically, I mean, you could look at a 3 or 4 bagger here, given some of the vol moves, you know, the vol skews are going to happen. So I get why options are attractive here. To me, they're a wee bit expensive, but there's a reason why they're expensive, to my point, like, because you've seen moves like this before.
Yeah. I would say that
I don't hate it. Let's put it that way.
Well, I mean, so one trade that I think you could look down at, like the 225 put, and you maybe sell that about $8, and then maybe you kind of buy the 215 for about 475, and you basically are short a put spread, which is basically defined risk, but you're taking in some premium, and you know you're basically $7 out of the money. That could be one way to do it. Maybe that helps to finance a call or a call spread. So I just wanted to highlight that, because I think you and I are in agreement that this thing looks way oversold. The price action today is not bad. Look at that RSI. It's kind of begging you to take a shot, I think, on the long side.
I think so.
Yeah,
I think so. Look, I mean, again, you're looking, you know, we have fun a lot of times, but on a serious note, I mean, it's all about risk reward, right? And you're looking for levels, and the level that Salesforce just traded down to today, that June low that we highlighted, see how it closes today. You get a decent close. Yeah, I think this is one you absolutely want to take a flyer on into earnings. Today is August 12th, so you have a couple weeks working for you, whether it's an outright stock or vis-a-vis options. I think there's something to do here. And if you want to, like, this is one, by the way, that I think if it starts to move in your favor, you can leg into. So you can buy, what'd you say, the two, what was it? What was the strike you gave?
In the weeklies that catch the earnings that they expire on September 5th, you know, the 235s.
So that you buy the 235s, and then if it starts to move in your direction, you can wait a little bit to sell the other upside call, the 250s or the 255s. And then instead of selling them for $1.10, you know, those things could potentially double in the right type of move. So that's how I look at it.
Yeah. And I mean, just the last bit there is that if you're basically, the stock is trading, let's call it 232, and you're buying the 235s for $10, you see what the break even is. It's, you know, 245. You do the math, that's like $14. It gives you like 4.5% or something like that. That's kind of your break even to the upside. Seems kind of reasonable. I just want to say one last thing on the chart here, guy. So you see this, you see where my cursor is, you see this gap right here. Okay. And then you see the stock had a big rally, gap lower, filled in the other gap, right? And then just took off, you know, late last year. Well, what does this look like to you, this thing that I'm circling?
Is that a hungry alligator or a head and shoulders?
This is a textbook head and shoulders. And you see what
I wanted to say hungry alligator.
I know the 230 level where we are. That's
big.
It really has to hold here, which is one of the reasons, guy, why I suggest the idea of doing it with defined risk. This is one of those examples where the technicals look precarious, if you will. I want to pull up one more, and I want to get your take on this, and I'm just going to put it in right here while I'm here. I want to go to RH. This one kind of stuck out to me a little bit because this is a day that we're seeing a lot of consumer sort of stuff. Let's just start with the 1 year for a second, okay? And you look at this, the way that this stock has been it's just been a slight lower left, upper right here. You see that gap going back to April. That was obviously an earnings gap. You see the flattening.
I think we traded down about $1.35 or something.
it looks like $1.23
Buck
intraday.
23. Wow.
Intraday. And when you think about that stock was trading at
It's almost doubled. I mean, it's
like
almost doubled since that low.
Yeah. So now if I just want to all right. So look at where the stock broke down, guy. I mean, that's one of the reasons why we're kind of highlighting that level in the Salesforce. So it was holding this 210 level like a what? Going back to 2020, like a boss. And then you finally saw, this breakdown on volume. Here we are now. Is this thing like they don't report for a little bit? We know that obviously tariffs are probably an issue for them. If you think about input costs, if you think about just a consumer being strapped, we know this is a kind of higher end sort of thing. They don't report until the 12th of September. Just thoughts here. This one just stuck out to me. I just saw it was kind of interesting.
Yeah, so it broke down. If you go back from the early April, I think whatever that day was, the second, the stock went from 250 to the aforementioned, Dan just said 123, and almost a straight line, which is remarkable in a word. And we've been recouping it along the way. So I think what's going to happen, this is just me, into earnings, is this continued slow grind to that level that we broke down from, and then probably fail if and when. So that's how I look at this.
Yeah. Again, I don't have a thesis on this name in general. I know it was it was a darling. It was a COVID darling, right? If we go back,
Darlington County, to your point earlier.
Yeah.
It's not a great song.
Yeah, if you look at this thing though, so right now, for expected earnings growth this year is supposed to be like nearly 100%, which is pretty shocking, and it trades at 22 times that, and then it's trading about 16.5 times next year's expected EPS growth of about 38% or something like that. On a revenue basis, I see the thing growing basically 11% this year, 10% next. So you can make an argument that this is a relatively cheap stock, but if you also want to make the argument that inflation is going to start to weigh on a consumer, this is probably not a place you want to be. Also, if you look at it with its $4.3 billion market cap, they have nearly $4 billion in debt and no cash to speak of. So this is a company where, from a balance sheet perspective, is not doing particularly well. So it's going to be very leveraged to some degree, a weakening consumer. But I just thought the chart was kind of interesting.
That's what we're always looking at things. By the way, we're going to go to a couple questions, and Doug Cass has a comment. So you mentioned 1984. I was in college, born in the USA. Everybody loved the album. I will tell you, there are 3 songs on that album worth listening to. I'm on Fire, which is, I like the song. No Surrender, I'm a fan. And My Hometown. Everything else on Cover Me is a shit. Born in the USA is a shitty song.
Born in the USA,
Dancing in the Dark is a shitty,
All right, but I just want
I'm Going Down is like, oh my God.
I want you to go listen to Darlington County and Working on the Highway.
I know. I'm familiar with the songs.
No, I know you're familiar. You haven't heard them in a while. That's all I'm saying. Okay.
Okay, that's fair. What I also haven't heard in a while
is on the wrong side of the line.
A question about Viking. So pull up a. This is a question we have from one of our listeners.
How's that come out?
Viking Therapeutics, VKTX, I believe, if I'm not mistaken.
Okay. All right. I'm driving here.
Okay. So please. So what's happened recently, I think you're starting to see a bearish to bullish reversal. Now, the stochastics are pinned, so we should start to slow down here. But the results so the weakness in Eli Lilly coincides with some of the resurgence in Viking. So what I think the street is saying is, well, wait a second. Eli Lilly, it's not just a one-horse race anymore. Maybe some other players out there. And these smaller biotechs might actually become attractive again. So I sort of like Viking here to answer that question about now, again, I didn't think it would trade as low as it did, but it definitely has been inflecting a little bit. And I do think if Carter were here, he would talk about this bearish to bullish reversal.
Yeah. And, we were talking about Eli Lilly last night, and I know this is like, still a darling. the story's broken. I mean, the story as far
Mhm.
as GLP-1s, like we've already gone through the euphoric phase of this thing, and it was one of the only things in big pharma that was working, and so was Novo Nordisk. And I get it. If I think Doug put out a note on streetpro.com yesterday, despite grossing up in his short positions, he's buying some deep value. I think Lilly was one of the names, and I think UNH was one of the names, and he's somebody who's going to take a long-term time horizon. He's going to rip through the financials of these companies, and he's going to basically make an assessment of whether he thinks that this is a great value. He might have already done that. So Lilly is really oversold if you look at it, and I can't speak to and I don't mean to be glib about this, but like I just learned this a long time ago. When you have a story that is just such a darling, and then you have a series of disappointments, like it doesn't usually stop on a dime. You know what I'm saying? Like it's just, and Carter uses an expression all the time from a technical perspective, like support is not a firm level. It's like a mattress in a way,
you
or something
move
like that.
into it, right? He talks
Yeah.
about that mattress pad.
But the one thing I'd say about Lilly is that on the whole way up, people were disregarding the fact that a pharma stock of this size was trading at a multiple of what it was trading at.
Nobody's ever seen before, to quote a famous leader.
Yeah, and so I guess my point is like even where it's trading right now at like 28
So
times, there aren't
expensive.
too many pharma stocks
Yeah.
that and so right now we're expecting $61 billion in sales this year, 73 billion next, 84 in 2027. And you say to yourself, okay, well, what's the pricing looking like? Because the pricing of these drugs was a huge part of the story. The TAM was a huge part of the story. And I'm hard pressed to think that the pricing will ever go up again. Lilly has a Lilly Direct program where you can get the drug, not compounded. You can get the drug for $400 a month. It was a year ago, $1,200 a month. Okay. Now there's obviously some subsidies and discounting, and there's all the PBM stuff in the middle and everything like that. But the point is the drug price is only going lower. The more effective you see some of these orals from some of the competitions going to drive the price lower. And so you look at a gap like that, a lot of folks were looking at that guidance and they were saying, oh, it wasn't that bad. The stock was down 20% and it hasn't bounced a little bit. So this is just a short-term sort of view on this sort of thing, but this is also still a market cap of $600 billion.
The pricing of the drug has mirrored the weight loss of its patients, oddly enough.
Whoa.
Like what I did there.
Well,
And
on
what you
average,
just
it's
talked
14%.
about in terms of revenue, I mean, look at the revenue. Now, granted, they have revenue growth, projected revenue growth that Merck will not see, but they have extraordinarily very similar yearly revenue, and it traded at its zenith. It was probably 3 times the market cap of Merck. So that was on, again, all the expectations and all the excitement. But even with the move lower, it's still, in my opinion, inexpensive. But we've talked about that. Real quick, we have a question about.
Can I just show you that? Go back to that chart for a second. So you see that there's Lilly on the top and you see Novo on the bottom. Okay. And Novo is basically retraced the entire GLP-1 move. Okay. And you could say that Novo positioning and all this other stuff and their drugs not nearly as effective as Zepbound. And, this is what, Eli Lilly has. But I don't see any reason why Eli Lilly should not trade at like almost a discount to the potential TAM and this and whatever. And so, and pricing and all that sort of stuff, like we just talked about. So to me, if you're looking from a trading perspective, maybe you get a gap fill. I just kind of feel like the story is broken to some degree and there was very few ways to play it. And this all started with your conversation about Viking. That's it.
Nice job.
Okay.
From Jack CF. I know Jack. Has CMG finally found a bottom? Okay, so we just traded down about 41 and change today. If you go back and look, I think the stock made an all-time high of about 42-ish back in the summer of 2023, I think June specifically. So past resistance becomes support, and I think we found it today. I want to say the stock trades about 19 million shares a day. I don't know if you can look it up for me and see what we've traded already in CMG, but if this stock were to turn a little bit here, given the stochastics and given that level that I just pointed out, yeah, CMG might have just found a bit of a bottom, Dan.
You traded nearly 7 million shares
Gecko
today.
the Great. Look at that.
Yeah, we're 2 hours into it. Somebody upgrade. Oh, Piper Sandler upgraded the stock, guy. If you care about such things, upgrade, downgrades, and we look at it from a sentiment standpoint. 27 buys, 10 holds, no sells. The average price target, 12-month price target is about $58.50. The stock's trading at 42.60. I mean, like, to me, I think this space has actually had some challenges. If you look at like the DPZ, if you look at the Kavas, you look at the sweet greens, maybe that had more to do with valuation. This is a stock that is supposed to see, or a company is supposed to see, reacceleration in earnings and sales growth next year. It trades about 30 times still. You know what I mean? So on those expectations. So I love that guy's profile pic. You know who that is? The profile pic.
Just said Gecko the Great.
I was just thinking about Michael Douglas, who is obviously in the 80s was an epic actor. He also directed was the China Syndrome. I think he won an Academy Award for that. That was in the late
he was
70s.
The producer of One Flew Over the Cuckoo's Nest.
Yes, which is one of the best movies made in the last, let's call it, 50 years or something like that.
That movie was, I think, the second movie, and don't at me if I'm wrong, but it was this, I believe the second movie ever to win Best Actor, Jack Nicholson, Best Actress, watch this, Louise Fletcher.
Nurse
there
Ratched.
Are very few people
Nurse Ratched.
Nurse Ratched could have pulled that out of their asshole the way I just did. Best Director and Best Picture.
What was the
subsequently Silence of the Lambs did exactly the same thing.
Yeah. The 70s made a lot of dark movies. That was it was meant to be certain parts uplifting, but a very depressing movie. China Syndrome, depressing movie. Deer Hunter,
China Syndrome was like, if you watch it now, that movie did not age particularly well.
No, but like things like Deer, why did all these really dark Apocalypse Now, dark movie? You know what I mean?
Apocalypse Now is that's
an amazing movie. But like, and then the 80s things changed. Phil and I were just talking. I showed him a scene from Fletch just before. He's never seen Fletch. There were so many great comedies.
What does Phil do for a living?
Right. He's a comedian.
He's never seen Fletch.
It's embarrassing. Oh, look at this, Jacob. Clockwork Orange.
A
lot of depressing stuff here. So
every once in a while, like my computer tells me I need to shift to Chrome. I don't even know what the F they're talking about, but I don't know if this is the Chrome that Steven just sent me. But your Perplexity person makes a long shot $34.5 billion offer for Chrome. I don't know if that's the Chrome I speak of, but there you go.
So what's interesting about this headline? First of all, Perplexity is raising at like $16 to $17 billion, or an estimated $18 billion. So, I don't know how they do that. It's got to be with the backing of like private equity or something, and it's going to become a big roll up. Perplexity is already talking about, or they should have a browser called Comet coming out. So Chrome is obviously a browser, right? So there's, Internet Explorer, which is Microsoft. There's Firefox, which was meant to be a greater.
That's a great movie with Clint Eastwood.
Was not a great movie, by the way. And that was an 80s. That was Clint Eastwood. That was a dark period for Clint Eastwood. He was in between Dirty Harry and stuff like that. He hadn't done Unforgiven yet. His directorial sort of run that he went on. Now, he did direct Outlaw Josie Wales and some of these other great, Westerns that he was in. But like Firefox, there was a couple other really crappy movies he was in there.
Well, that movie with the orangutan sucked.
Well, they were fun. I mean, like
I'm not looking to have fun at the movies.
What does that mean? Like,
what one of those words?
What are you looking to do? What are you looking to do? Are you going there just for like the cherry Coke and the popcorn?
No, I don't drink cherry.
I'm looking
to be moved. I'm looking for emotion. I'm looking to be moved. I'm looking for feeling something that like deep, like wow.
All right,
I don't need to see Clint Eastwood drinking a beer with a friggin' orangutan. That's just dopey. You're playing to the lowest common denominator. Is that what we've reduced ourselves to as a society?
Well, ask him. He's one of the best actors of our generation.
I'm sure he's embarrassed. He's embarrassed by it.
I don't think so.
I think
Sandra
so.
Locke, who was his wife for a bit, was in those movies with him. She was also in Outlaw Josie Wales with him.
Yeah. I think she
so
was
Doug
in.
said produced China Syndrome, not director.
I didn't say he directed it.
So
You
how I
said
started talking about this, Michael Douglas, I don't know how we got, because the guy's Avatar. Michael
Well,
Douglas right now looks exactly like his father, Kirk Douglas, did when he was.
it happens.
No, but
Do
like
you think you're starting to look like? Do you think you're starting to look like your dad?
No,
Or no?
no. But whatever.
There might be people that think you do.
I don't think so. I have a twin brother, and some people think we look alike. We do not.
Well, he's your twin.
He's bald.
Hold on, keep talking because I'm gonna get
bald.
something to the. You start looking like people. Hold
All
on.
right, I'm gonna keep talking. Why? Who do you
Well,
want?
no, I'm gonna send a picture to Jacob to put up on the thing, and you see.
All right, so just to finish the perplexity thing. So a lot of people feel like the browser, believe it or not, for now and desktop is going to be a new gateway to a lot of these large language model, right? So Perplexity is a wrapper of these large language models. You can use Anthropic's Claude, you can use OpenAI, you can use Llama from Meta. There's a handful of others, and so they want to overtake Google as it relates to search. But here's the problem that Google has right now, that there's going to be remedies coming out in the not so distant future, maybe in a couple of weeks, from the DOJ, the FTC suits that they've had, that might cause the company to break up. And that means one of the things would be selling off their Chrome browser. I think the thought is it gives them an unfair advantage in internet search and the like and that sort of thing. So Perplexity, they can't do it on their own. It would have to be some huge mashup of a lot of like well-heeled financial backers. It would be a very complicated deal. So who knows? Arvind Srinivas, who's the CEO, the founder of this company, has been on our
friend
podcast.
of the show.
Yeah, friend of the show. He was our show. Fast Money was the first show that he actually went on CNBC. Now he's
thanks to you,
rock star. Doug is owning me. Michael Douglas never directed a movie. He did direct.
I say he produced
of San Francisco.
One Flew Over the Cuckoo's Nest.
Okay, guy. He was a prolific. One of my favorite Michael Douglas movies is Romancing the Stone, that he was in with Kelly. No, not Kelly McGillis. Who was the other one? Who was that other woman? Great movie.
Catherine something. Here, Jacob, shove this picture up. So
we got to go soon.
No, I know we do. This is going to take 2 seconds. Okay. So let's see if people think. So this is me today. I'm 61 years old, right? We've established that.
62 on deck 13.
Yeah, 18.
Deck 18. You know who's born on deck 13?
Somebody.
Taylor Swift, 1989. Deck 13, 1989.
He's a Sagittarius.
You're deck 18, 1963. 1963.
I don't know, Jacob,
what are you throwing up there, Jacob?
Well, you're going to see in a second, I think. I don't know.
Maybe you'll see it. Maybe you won't. Who knows?
I'm not trying. So that's my old man. Do I look like him or no?
I don't
That's
know.
Me, by the way.
The one
in the red over, not me with the red shirt.
Not like Christmas Day, you think, or no?
Yeah, me in the red overalls.
Good looking man. He's the sort of guy you wouldn't want to F with,
Yeah, and that's my little brother next to me.
Look at that.
So they say. I mean, I don't know if I look.
People say, well, let's see if we can blow a guy up next to that. Can we do a side by side? A lot of red. Yeah, I see it a little bit. You guys have different hairlines, by the way.
No, he was bald. I still have my hair mostly
ish. All right, so we should get out of here.
Yeah, well, no, I just listened. I mean, that's it. But we had fun.
On Worldwide Exchange, guy. When did you do Worldwide Exchange?
Oh, who the hell
That's
knows?
the 5 a.m. show.
No, I don't think I did Worldwide Exchange.
Look at what the back of that thing was.
I don't know.
He's a good-looking man. I love that picture of him holding his 2 sons.
Yeah.
Worldwide Exchange. You seem very concerned about something.
Yeah, that's a capture the point. I'm concerned. It was probably 4:30 in the morning. I had to be on a dopey show, or no, that show's 5 to 6.
No, 5 a.m. to 6 a.m. Yeah. I loved it when Wilf did that show from London.
I love Wilf.
Yeah, he's the man. All right, so you had a podcast, Risk Reversal podcast with Liz Thomas of SoFi. That's in the podcast store. Yesterday, I had a conversation with David Rosenberg. That's in the podcast store. We have Peter Bookvar dropping tomorrow in the podcast store, you and I are sitting down with Neil Dutta, who is an economist. That's going to drop Friday in the podcast store. So we got a lot going on. I don't know why we call them stores. It's not a store. It's not like you're buying it. You're subscribing to it. It's free in the podcast universe. It's go wherever you get podcasts and go there. So that's all of us. We got Carter, I think, tomorrow on the market call. We're out of here. You're doing it. Don't be so guy. You got to snap it. You got to snap it. All right. See you later. Thanks.